Dollar and euro use between Russia and China drops to statistical error. Amazon and OpenAI strike a multi-year $38 billion deal. And Morgan Stanley raises its Brent crude price forecast for the first half of 2026 to $60 a barrel. This is the Economic Bulletin here on Qnews. I'm Henny Saif, and we'll start off with the bilateral relations as Prime Minister Mikhail Mishustin has stated that the share of the dollar and euro in Russia's trade settlements with China was at the level of statistical error. In a meeting with his Chinese counterpart, Premier Li Qiang, Mishustin noted that China remains the Russian Federation's largest trading partner, and that bilateral trade is now conducted almost entirely in the national currencies. For his part, Premier Li Qiang described Russia and China as good neighbors and good partners who trust each other. Meanwhile, on a domestic front, the Ministry of Natural Resources has reported that China's marine economy expanded 5.6% year-on-year in the first 9 months of 2025, generating 7.9 trillion yuan in output. The sector showed strong performance across multiple areas, with offshore wind power capacity surging 42.1% and CU's approvals increasing 19.2%. China maintained its global leadership in shipbuilding, capturing 70.6% of worldwide green vessel orders. Marine engineering equipment also dominated global markets, accounting for approximately 60% of new international orders. Officials noted the robust growth provides crucial blue support for China's broader economic development and maritime power ambitions. China's foreign ministry has revealed that it will extend a visa-free policy for countries including France to December 31st of 2026 and expand the scheme to cover Sweden effective November 10th.
为了贯彻落实党的20届四中全会精神，扩大高水平对外开放，持续便利中外人员往来，中方决定将对法国等国的免签政策延长至2026年12月31日。此外，中方将于2025年11月10日至2026年12月31日对瑞典免签。
Moreover, China's Ministry of Finance has established a new debt management department to address the growing local government debt risks as the economy slows. The department will formulate debt policies, set borrowing limits, and oversee repayment activities, with particular focus on hidden debt from local financing vehicles. The move follows last year's 10 trillion yuan debt relief package and aligns with Beijing's broader effort to stabilize finances amid economic pressures. Li Dawi has been appointed to lead the new department. And for further analysis, we're joined from London by the CEO of QW Capital, Mr. Gianluca Lubefalo. Mr. Lubefalo, welcome to the Q News Economic Bulletin. What are the strategic, deeper implications of Russia and China conducting nearly all bilateral trade in rubles and yuan?
Yes, good evening. It's not a news, actually. It's a confirmation of what is happening. We've been saying this for quite some time as well with you in the past, that there is a clear tendency and push for a de-dollarization, even, let's say, reducing the euro dependency on this settlement, but euro has always been marginal. So the key point is on dollar. So the dollarization is not an event, is not just a new from this last Russia and China deal. It's just a trend that is within the BRICS or the Global South framework and is actually expanding its reach. So it's something that has a real, direct, important geopolitical implication.
Well, does it mark a structural shift in the global financial order, or is it mainly a tactical response to Western sanctions?
No. It's been happening before trading sanction. I would argue that the seed for this was already pre-Ukraine-Russia war. And actually, we can even claim that part of the implication of this war, let's say proxy war, they can even almost be considered as a consequences of this de-dollarization. To me, the biggest game in town over the last 5 years has been, by and large, this tendency of part of the world to de-dollarize. So don't depend on dollar to settle their trade. What it means that basically there is a cap, a market cap on the amount of financing the US can rely upon to fund its debt. The implications are immense. Don't forget that when dollar became the global reserve currency to substitute the previous one was the British pound, Giscard d'Estaing was at the time the foreign minister in France and then became prime minister and president, was saying that this is an exorbitant privilege. And that is not an exaggeration. To be running the global reserve currency is a huge privilege. Now, there are other countries who are actually questioning that. If you look at the average historically of years in which a currency was the global reserve currency, we had the French franc, we had even the Portuguese escudo for a few years, that was less than 20 years. Anyway, the average is around 40 to 50 years. And the US has gone already above 80 years. So in theory, someone can argue that historically, it's been far beyond the average in the past. Having said that, we don't have at the moment a replacement because yes, China and Russia can settle their trade into renminbi or into ruble, but it would be very unlikely, at least on the short term, to see that other country will settle their trade agreement replacing the dollar one into ruble and renminbi. So the point of the strength at the moment of the dollar, the case in favor of the dollar to keep being the global reserve currency, is that at the moment within the physical and the fiat currency, we don't have a credible substitute. Ruble because it's only obviously trading in Russia, renminbi because of the control of capital by the Chinese authorities. So at the moment there is not a credible replacement. But
yes, go ahead.
Today, yeah. But if we extend to digital currency, that is a different game, because that's why the Genius Act was pushed and forward and passed with 65 to 22 votes in US, because it could very well be that if we limit our search into the physical currency, yes, my previous statement, there is not a reliable substitute for dollar is still confirmed. Now, I'm not too sure I would be able to keep the same sentence if we extend to digital currency. Digital currency backed by real asset could very well be a substitute.
Mr. Lo Befalo, now, the de-dollarization has been going on for a while, and what's happening now is merely a confirmation of that. So does that prove the sustainability of this trade model for both countries? And you really don't think any other countries could try and follow suit, or other countries that would try and follow suit need to be at some sort of a trade conflict with the US?
Look, we are just experiencing that. Look about all the oil trade between Saudi Arabia and China, is already happening in renminbi. So it's not an hypothesis. Most of the BRICS countries are doing settlement out of dollar. So it's already happening. Question is this is actually, if you think about it, as a reflection that we are assuming that we are in a multipolar world, but the multipolar world ended, if you like, just after the great financial crisis with the rising power of China, with the credit impulse that was the biggest support of the global recovery in financial market and the economy, not just the monetary policy by most of central bank in the Western world. What really was the backbone of the recovery from 2009 till, let's say, at least 2015 was the credit impulse by China. So this basically meaning that we no longer have a unipolar world as we had from the, let's say, 92, so from the fall 89 to 92, the fall of the Berlin Wall, and the dissolvement of the Russian Confederation. We then had, so the Soviet Union, we then had the real unipolar world, and the unipolar world was reflected with one reserve currency. We now have to acknowledge that we no longer have a unipolar world, we have a multipolar world, for a time being with one currency, but could very well be that the multipolar world we are living, that we are experiencing, we are observing on a day-to-day basis, will be reflected as well in a world that won't have just one reserve currency. It is very natural.
Mm-hmm. Could liquidity or exchange rate volatility or the limited convertibility of the yuan pose any possible constraint?
For the one to become a global reserve
Yes.
currency, absolutely yes. It's not in the position to be. But here, I'm not sure China has an interest in replacing dollar. His interest in acknowledging their currency as one of the potential candidates, but I'm not too sure they are really interested in replacing. Maybe replacing the dollar and having one reserve currency as a global one is maybe yesterday world. So we may have to understand that we're going to be in a multipolar world, so multi-currency as a reference, and that's why we're having more macro volatility. So, I mean, the question is, are we sure? I can tell you that I'm pretty comfortable over the next few years, we still have the dollar as a global reserve currency. I'm not sure that we're going to have in 20 years' time, but I'm not sure we're going to have one reserve currency in 20 years. We may have more than that.
Mm-hmm. China's new debt management department aims to address the hidden local government debt. What does this move tell us about the depth of China's fiscal challenges? How much risk does local debt pose to the national economic stability?
Now, what they call it hidden or the implicit debt is all the local government. That is true when we are talking about the credit impulse, so the liquidity that was injected into the system in China was done through local authority. That's how the real estate, push was that then transformed itself into a bubble that they assess and they kind of deflate. It was always through local government authority, or even the famous wealth management product that they were a kind of finance that lost a bit control. Yes, it's true, it's always a local authority, but we have to understand that China economy is, yes, we think as a dictatorship, as a centralized government, but actually the local authority are much more independent than what we think, and they are the base of their kind of capitalism. So yes, they will need now to control, they need to rein on it, they need to kind of put a limit on this, but don't forget that the same local authority who have been issuing this implicit in the debt are as well the real engine of the China expansion. Now we're having a slowdown. In any slowdown, what the authority do? Try to control on that to make sure that we have the condition for the recovery. So this is very natural. I'm not particularly surprised.
Mm-hmm. Well, what about China's extension and expansion of the visa-free policies to European countries, suggesting a renewed openness? Is this a signal that Beijing is pivoting back towards an economic diplomacy after years of inward focus and geopolitical tension?
Yeah, China is trying to do. So first of all, yes, I agree. It's a sign of openness, but don't forget that China always relied on export markets. So their economy has been based on the fact that they became the supply chain for industrial production of the world, the engine of the industrial production of the world. Now they're trying to having their consumer to become one of, not like the US who rely for consumer for 70% of the GDP, but they want to increase the share of the internal consumption. To do that, they need to make the economy more open. They need to have tourism. They need to have student visitor. They need to have family going back and see their family, people living at Chinese citizens living abroad. There are many in France being more free to go and spend 30 days there. So they want their economy is part of the new idea that the internal consumption, even through tourism, even through visitor, has to become more relevant to the economy than production and export. That is consistent with their long-term plan that was established not on this convention of the Communist Party, but on the two convention ago.
Mm-hmm. Do you expect any sort of reaction from the US, from the US dollar?
I mean, no. In reality, the US dollar is at the moment is one of the short dollar is one of the most common trade at the moment. So anytime we see any event, we see the dollar strengthening versus euro like the last few days or another currency. But don't forget that when we look at currency, you always have to think that is a currency trade is not a trade. A trade versus another is by definition a pair trading. So you're long something, you're short other or another one by definition. So in the case of dollar, you are short dollar, long euro. So when there is such a huge concentration of position in one go, everybody is short dollar versus anything else, this position is very sensitive to any little change. So any little change will trigger some technical level for which then the dollar will strengthen. So we want to keep seeing dollar strengthening on occasion, but it's actually still nowadays the most common trade in the foreign exchange market, short dollar.
Yes. Mr. Gianluca Lubefalo, the CEO of QW Capital, thank you very much for joining us from London, sir. And moving on to the latest developments from the tech sector. President Donald Trump has stated that NVIDIA's most advanced AI chips will be reserved for US companies and withheld from China and other countries. He emphasized the only US customers should have access to NVIDIA's top-end Blackwell chips, produced by the world's most valuable company.
Alabama, we love Alabama. I only won it by about 47 points. I don't think that...
Amazon has signed a multi-year $38 billion deal to provide OpenAI with cloud computing services, granting the ChatGPT maker access to hundreds of thousands of NVIDIA GPUs and training and running AI models. OpenAI will start using Amazon Web Services immediately, and with full capacity expected by the end of 2026 and expansion planned beyond 2027. Microsoft has signed a $9.7 billion deal with data center operator IRIN to access NVIDIA's advanced chips and ease its AI computing shortage. The partnership allows Microsoft to expand capacity without building new centers or adding power, while avoiding heavy chip spending. IRIN will deploy the chips through 2026 at its 750 megawatt Texas site, partly funded by Microsoft's repayment, which also supports a $5.8 billion Dell deal. Microsoft SFO Amy Hood said AI capacity limits are now expected to persist until mid-2026. Morgan Stanley has raised its Brent crude price forecast for the first half of 2026 to $60 a barrel, citing OPEC Plus's decision to pause production hikes and new Western sanctions on Russian oil assets. The bank expects a substantial surplus to peak in the second quarter of 2026, but projects slowing non-OPEC supply growth and limited OPEC capacity increases will help rebalance the market by the second half of 2027. OPEC Plus's cautious stance, including a small December output increase followed by a pause in the first quarter of 2026, signals the group's continued market management amid glut concerns. OPEC Plus has agreed to a modest oil output increase for December and a pause in further hikes during the first quarter of next year as the group moves cautiously amid growing concerns about a potential supply glut. The 8 participating members, Saudi Arabia, Russia, the UAE, Iraq, Kuwait, Oman, Kazakhstan and Algeria, approved a 137,000 barrels per day increase for December, matching the pace set in October and November. The group noted that beyond December, it would pause production increases in January, February and March of 2026 due to seasonal factors. UAE ADNOC's chief executive Sultan Al Jaber has stated that oil demand will remain above 100 million barrels per day beyond 2040, while flagging headwinds in the near term. However, he noted that the long-term outlook shows growth in energy demand, adding that cost discipline must be balanced with capital investment. Al Jaber also highlighted the more than $4 trillion in capital investment needed annually to cover grids, data centers and all sources of energy supply. He further cautioned that dormant capital tied up in existing energy infrastructure needs to be freed up. Germany's economy minister, Katharina Rieche, has announced that a government program to lower electricity prices for manufacturers is expected to be launched at the beginning of next year, pending final approval from EU competition authorities, of course. Rieche also indicated that a separate initiative to provide financial support to industries heavily reliant on purchasing greenhouse gas emissions rights is being viewed favorably by the EU. She highlighted that the European Commission is sending positive signals for extending the electricity price compensation scheme well beyond 2030. Oil prices were little changed despite news that OPEC Plus plans to end its supply increases, with the market weighed down by fears of an oil supply glut and weak factory data in Asia. Brent crude futures were down 0.02% at $64.76 a barrel. The U.S. West Texas Intermediate crude was down 0.03% at $60.96 a barrel. Gold prices firmed on Monday, holding above $4,000 an ounce as investors hunker down for U.S. private payroll data due this week to assess the chances of an additional Federal Reserve interest rate cut this year. Spot gold rose 0.2% to $4,009.87 an ounce. U.S. gold futures for December delivery rose 0.6% to $4,021.4. The metal, which has gained 53% this year, has dropped over 8% from a record high hit on October 20th. Elsewhere, spot silver rose 0.2% to $48.77 an ounce. Platinum climbed 1.1% to $1,585.2, and palladium gained 1.8% to $1,459.42. Federal Reserve Governor Stephen Miran defended his call for deeper interest rate cuts, arguing that strong stock markets mask underlying economic weaknesses. Miran dissented in last week's decision, advocating for a half-point cut instead of the approved quarter-point reduction. He warned that policy remains too restrictive, pointing to stress in housing and private credit markets. President Donald Trump has called on Democrats to open up the country as the government shutdown threatens food assistance for 42 million Americans. The stalemate over healthcare tax credits has left 750,000 federal workers furloughed. With food stamp funding set to lapse this Saturday, the Congressional Budget Office warns the shutdown could cost the economy up to $14 billion and cut fourth quarter GDP growth by 2%. Meanwhile, in Latin America, the Mexican Central Bank has reported that remittances to Mexico declined 2.7% year-on-year in September to $5.21 billion. This decrease marks the sixth consecutive month of contraction. The continued downturn in Mexico's key source of foreign income contrasts with the strong growth reported in other Central American nations this year, highlighting divergent economic trends across the region. Egypt's cabinet has announced that Egypt and Qatar are set to sign a real estate development agreement in the Mediterranean province of Matruh in the coming days. This comes as part of a broader $7.5 billion bilateral investment partnership. The deal aims to boost Qatari investment in Egypt and provide economic support as the North African nation grapples with mounting debt and a widening budget deficit. Iraq and Turkey have announced agreeing to finance water infrastructure projects using revenue from Iraqi oil sales. The deal will see Turkish firms build water projects in Iraq, with payment drawn from oil export proceeds. The agreement advances a water cooperation pact signed last year and includes plans for dams and land reclamation projects. In stock markets, the People's Bank of China has renewed a bilateral currency swap agreement with the Central Bank of the Republic of Korea. The People's Bank of China stated that the value of the swap is 400 billion yuan or 70 trillion Korean won, valid for 5 years and can be renewed upon mutual consent. It added that the renewal of the currency swap agreement will further deepen bilateral monetary and financial cooperation, facilitate trade between the two countries, and support the stability of financial markets. That brings us to the end of our economic bulletin for today, but here's a reminder of the stories we've been covering. The dollar and euro use between Russia and China drops to statistical error. Amazon and OpenAI strike a multi-year $38 billion deal. And Morgan Stanley raises its Brent crude price forecast for the first half of 2026 to $60 a barrel. These are all the economic and financial news we have for now, but please don't forget to follow Qnews on YouTube, Facebook, X, Instagram and TikTok. at Qnews EGY to stay informed. I'm Hani Saif. Thank you for watching.